So this is the overview using Santa Clara County single-family homes, and that's just because it takes too long to calculate the data. But you have two different graphs here. One is the frequency. So right now you can see we've been basically flat for a little bit. Right about 50% of the homes are selling for over asking price. And that's pretty good in any marketplace. Considering what we're going through right now, that's exceptionally good in my opinion. But it also, as a real estate agent, makes it more imperative that you price a property correctly, because buyers aren't necessarily willing to bid up and as often to get to the market value. And as we go into magnitude, they're bidding up less, so they're more conservative. And that tends to happen after every recession, every negative impact on the real estate industry, because the buyers are just more conservative with their money. So here is what I was talking about on the magnitude of overbidding. The gap in here is basically from 98.5 to about 101. The flat gray line that you can barely see is 100%, and right now we're at about 100.5%. So just a 0.5% over the asking price is what the sellers are getting on average. The next group of slides is all on the macro data. I've tried to improve my labeling a little bit, and they all have the same format for the most part. The red is percentage, so if someone wants to see if the market's doing better or worse, you can just look at a percent. The golden line is the 5-year historical, the median of the 5-year historical number. So that would be 2019, 18, 17, 16, 15, which were all great real estate years. So if you're doing the same as the median of 5 great real estate years, you're having a great real estate year. And the blue is the actual data. So what's this saying? Days of unsold inventory is basically how long does it take to sell all the existing inventory at the current rate of sales. And you can see we were basically right at the 5-year median. We got off to a little bit of a slow start, but if you pull out your calendar and look, this is because of Super Bowl. Super Bowl is local, the 49ers were in there, and that real estate is an optional event, and that means that people were doing things other than real estate, so the sales activity wasn't as high as it normally would be. Super Bowl ended, the activity was right with the past 5 years, and then shelter in place happened here, and my date for shelter in place is the 16th because that was when it announced. So then you can see the number went way up, and that's because the number of buyers dropped. Now some sellers pulled their houses off the market, but the buyers were pulling out of the market more rapidly than sellers, causing the market to slow down and days of unsold inventory to increase. Then as we started to be able to show vacant properties and ultimately occupied properties, even though it's inconvenient, days of unsold inventory came crashing down, which is a good thing. It's one of the few things you want it to be low, because that means it takes less time to sell your existing inventory. In fact, we can take it right here, and it's a little odd because it's right on the 100% line, but you come over here and you'd sell every home, every condo in San Mateo and Santa Clara County in 34 days, which is pretty darn good. The last data point is right here. You can see it right underneath my laser pointer. And so now we're down to about 31 days of inventory. So that means in 31 days, in just the month of July, we will sell everything that's currently on the market if no new inventory came on the marketplace and the rate of sales remained constant. The reason this drops down to 0 on week 26 is next Saturday is week 26, so we don't have that data yet to present an add to the graph, and so it's plotted at 0. The other thing you have to keep in mind a little bit, my week starts on Saturday and runs through Friday. So July 4th is normally a pretty big impact, and being on Saturday, that's at the beginning or end of the week, depending on how you look at it. So this year, we're going to have the maximum shift in data. So if data is off by a week, don't be too surprised. Now we're looking at macro data, and this is total currently available inventory, not new inventory in the last week, which is what we're going to start doing, but everything that's available in the marketplace. And just for full disclosures, I put less minor areas. And the reason for that is I count all single-family homes in both counties. But in San Mateo County, to manage the data without it being outrageous, I eliminate condos, townhouses, not on the bay side and not on the north side of San Mateo County, but any condo townhouses that are in the mountain areas would be eliminated. In the expensive areas like Menlo Park, Atherton, Hillsborough, Portola Valley, and along the coast. But that is very insignificant. I'm just putting it on there for disclosure purposes, and the data is consistent, and that's why you do statistical analysis, is you're looking for consistency, because you're looking for trends that you can't see when you get involved in on an individual basis. So even if you use weird definitions, as long as you're consistent, you might be able to tell something from your data. So your blue line here is the data. So this is total inventory, and you can see inventory even right around shelter in place. You know, it went up, it went down, but it, you know, didn't get far off. And on a percentage basis, you can see it really wasn't that different. It's been basically running at 100%. I mean, you got to be maybe about 117%, and on the low side, you got down to maybe 93%. That's not far off of 100% a completely normal year. Right now, you were running up a little bit above. Now we're running a little bit below. And again, I'll try to explain this around the holiday. Normally, with a holiday, sellers don't go on the marketplace because they have a trip going. But with the quasi-shelter-in-place still in effect, they're not going anywhere. They're going to say, okay, let's put our house on the marketplace. And so we actually have a little step up compared to the normal, even though the inventory is flat. We're basically not getting this huge fluctuation that we see in typical years, and that's about the week shift that I was talking about. So if July 4th happened on a Friday, we'd be back, and that's why the blue line's so far ahead compared to the gold line. There's also a possibility I'm off by 1 week, because it looks to me like we're off by 2 weeks. I just haven't gotten there. I have corrected some of the minor errors that people probably weren't noticing, because those are the ones I go for first. Anyway, moving on to the next one. Now this is looking at new listings on a weekly basis. So this is where you start seeing the COVID impact pretty dramatically. So the vertical line is when shelter in place was basically announced, which is impacting the marketplace. You can see you went from the blue line way up here to way down here. You can see your percentage drop. We dropped to about 50% new listings. So half the sellers elected not to go on the marketplace. And then you can see, as we could show vacant properties, they started to come on the marketplace more and more and more and more. And, you know, last week we were still sitting at about 90, no, actually it was probably closer to about 87%, 85% of normal. This week we shot up, but that's really not because inventory went up a little, as you can see by the blue line, but you can see the median number of new listings typically comes plummeting down. So for example, if we were approaching the July 4th weekend or week, a lot of sellers wouldn't put their house on the marketplace that week and would delay or accelerate and avoid it. And that's what you're seeing here. So this is the week that July 4th typically happens. I'm not going to happen that week. I'm going to happen week 27 because I'm off by 1 day. And that's because I set my days at the beginning of the year. And unfortunately, this is one of those shifts that's still going to be there. But you know the shift's there, you can adjust for it, and you can still interpret the data. Now we look at the other side. That's the seller side. We're now looking at the number of offers accepted. So this is the buyers. This is how many buyers are coming onto the marketplace. And you can see they basically disappeared with shelter in place. We got down to something like 33% number of buyers. And then as shelter in place became more the norm and more something people were used to, you can see that they came right back up, and we're now sitting at 100%. So you're now right at about 100%, and the line for the raw data is straight up, which I think is all very good. So it's encouraging to see that kind of activity. Now we're moving on to the number of closings. Remember, closings lag behind fairly significantly, and that's going to continue to lag behind. So the number of closings tend to lag behind by 30 days in the duration of escrow. So and they also tend to be some fast ones, some slow ones. So the V shape on the previous things for offers tends to become a little more spread out and delayed, and that's exactly what we're seeing here. Now we look at the number of expired listings. There was a big spike right here, and you go, wow, that's not so good. Again, I think I have an absolute reasonable explanation. A lot of agents expire their listings at the end of a month. We had a lot of withdrawn listings right as shelter in place happened. Some of those withdrawal listings came back on the market. Some did not. When the listings that were withdrawn that did not come back on the market expire, they show up as new expireds for this week. So they actually will double count. They will count as a decrease when they were withdrawn, and they will count as a decrease when they expire. The short of it is I'm expecting another spike up in the red next week, because we're going to go through June 30th when a lot of listings that were withdrawn back in shelter in place are going to expire on the 30th, and they're going to show up as new expired listings. But I also want to point out, let's look at the number. This week we're right here. We're talking about 20 listings in two major counties, Santa Clara and San Mateo County, between single family homes, condos, and townhouses. To lose 20 of those off the marketplace that were unsuccessful, even if that's the number, and I'm saying it's too high because of the withdrawn listings, it's a drop in the bucket. Looking at the number of cancellations, you can see the huge run up back here right when shelter in place happened and people were reacting to it. And you can actually see we were a little bit above going into shelter in place, which is just unusual, a little unusual. We did have slightly more inventory, but you're talking about as much as 40% high. So we went between 40% and 100% and up and down. If we shifted the times by a week, maybe we'd be at 120%. So we were, for whatever reason, before shelter in place, before it was even on anyone's mind, we were losing about 20% more listings for cancellations than we normally do. Huge spike right around shelter in place. Now we're down here and we actually have less. We're varying from about 75% to maybe 105% for the most part. You had a spike here at the end of the month. We'll have another spike maybe at the end of the month. Maybe, I don't know why cancellations spike at the end of the month, but that's almost what it appears to do. It also alternates from week to week, which makes no sense. You'd expect it to be more consistent, at least I would. And you can see on the 5-year median, it is even spiky. And when you're taking 5 years difference and taking a median, the fact that it's spiky like that is pretty bizarre. But it's the data. I believe the data is accurate, and I live with it. This is withdrawns, and you'll notice that there's no red line, no percentage, no comparison to the 5-year median. And that's again because the MLS will take a withdrawn listing and expire it when the expiration date happens. So after about 6 months, there's very few withdrawn listings. So if I have to go back and generate past data for 5 years, the numbers are zero and meaningless. This is all the components we were looking at. So if everything was on the red line, you'd have a completely normal year. So what you do here is you look and see who's way above and who's way below the average, the 100%, what you'd expect. So on the low side, you have the golden line here, and you go up and you go number of closings. Doesn't bother me a bit. Number of closings are going to be lagged by 5 weeks. You can see it's going to be much more of a, almost, I wouldn't call it a U, I'd call it a spread out V. And, the trend is going to be up because the number of offers are up. Then we turn around and we look at, okay, what's way above? And it's this line here. And I go, okay, it's a blue line. Is it available listings or is it expired? Well, the available is the dark blue, so it's expired. So we have expired listings at 200%, but I just said the number was, I forgot what the number was, maybe it was 30, is a drop in the bucket. So I'm not worried about that line. So now the next line that's the most off is the green line. Well, what's the green line? It's hiding behind cancellations. So again, that's a very small number, and I could care less about the number of cancellations. So on the high side is the number of new listings, and the number of new listings that's coming on the market is a little bit higher than you expect. But if you look back a couple weeks, it's completely average. And then I go, well, why is it higher? Oh, it's higher because normally it's dropping off for July 4th, and we really don't have a July 4th this year. So of course we're up for the 5-year median. So that's how I explain the data. I think shelter in place impact on the real estate market is pretty minor from what I'm seeing. Okay, we're now going to shift gears a little bit. We're going to look at 22 micro market areas in a table, and then followed by 13 micro market areas on my heat maps. We're going to be looking at two things. We're going to be looking at overbidding, both frequency and magnitude, and we're going to be looking at days of unsold inventory. So here is the overbidding, and again, to calculate overbidding, and this is those two things, the frequency and magnitude combined. And if one is in one category and one's the other, I try to see which one's more in, which is more significant, because I only wanted to come up with one rating. And so this is lagging behind because I need the sale price, which means I need a close of escrow. And you can see I'm also going back 5 weeks. It looks like it was the very end of May because now we're on June the 6th. Now we're on the 13th, but wait a minute, there was no change. That was because we had 3 weeks where the data came in without changing buyers or sellers. So there's June 6th, June 13th, June 20th with no change. And now we're going to go on today's data. And I'm sorry, I messed up. That data is completely wrong. There is more balanced market areas in Santa Clara County and San Mateo County. But the good news is, I'll give you a sneak preview. This is a duplication of the days of unsold inventory, which is the leading indicator, which is where the marketplace is right now. So the heading is basically wrong. The data is correct, and we'll get there in a second. But that basically says that Santa Clara County is in a red hot marketplace, except for the expensive areas along the border, which is in a balanced marketplace, and all of San Mateo County is in a red hot marketplace. You know, what more could a person want? Here is the actual data there, and you can see from this chart, which is why I moved it around, is to show you that I was wrong. So if you look at the current data based on sale price, right now we're at 100.5%, 99, 100.6. You can see, and it's color coded. So these two micro market areas, the moderate low and the moderate and Cupertino Sunnyvale, should have been red in Santa Clara County. Everything else should have been gray, yet my map was in red, and I explained why. My map was mapping over here the days of unsold inventory. And let me just start over on the left side here and do it. So the first column, there's four groups of columns. One group is here, and you can see the vertical separation between them. One there, one there, one there. So the first one is column of the group is before shelter in place. So this is where the market was before shelter in place. This is where the market is right now. And this is whether it's more of a seller's marketplace or more of a buyer's marketplace. So how you read this, countywide, we're at 31.6 days of unsold inventory, which is a seller's marketplace, red hot seller's marketplace. The definition changed to back up at 40. Before shelter in place, we were basically at 36. So it now favors a seller more because the days of unsold inventory is lower. And you can just go through each one. South County, and it's noteworthy here, that's red at 46 because it's a slower marketplace normally, and normal for South County is 75 to 150. So 46 is a red hot seller's marketplace. I don't think, and I have not looked, and maybe we can do it at the end, but I don't think I've ever seen South County at 23 days. Now, wild guess, without even looking at it, my off-the-cuff comment is, with shelter in place, employers are letting employees work at home more. That makes the commute from South County up to Silicon Valley less obnoxious because there's less people on the road and I don't have to do it every single day. And therefore, one of the barriers keeping people out of South County disappeared overnight and causing a much higher demand, causing days of unsold inventory to drop. I analyze what the market's doing. I try to stay away from why I think the market's doing because there's no way to know. So that's my guess on why the market's doing it. But the market in fact, I think that is the hottest area in the whole area right now. South County is the fastest moving micro market of any size. There's 24 here in North San Mateo County for condo townhouses and 24 for single family. But Gilroy and Morgan Hill and San Martin are at 23.5. So that is very noteworthy. I think there may have to be moved from a 75 to 150 marketplace, but time will tell. Anyway, that's the way you go through this whole column. This is based on days of unsold inventory. Then we move over to frequency of overbidding. How often are people overbidding? And so you can see you're in a red hot marketplace here, but it's still blue over here. So the trend, because you went from 65 basically down to 57. So that favors a buyer. So shelter in place has aided a buyer in that particular micro market area, but it's still a seller's micro market area. So I'm trying to do not only where we are, but the rate of change for a span of several weeks. And that's how you read the whole chart. Over here is the magnitude of overbidding. And a word of caution is buyers seem to be much tighter on their purse strings. So it's more important now to get close to asking price if you're a listing agent, because if you go at 90%, it's going to get hard for buyers to go up 10% on you, even though before shelter in place, they would have gone up 10%, no problem. And then lastly, prices, and this is worth spending a little time on because I typically don't spend that much time on price on my other graphs, but you can see all the reds would mean the prices are higher, the whites mean the prices are the same, and only the blues are the prices lower. So let's look and see where we're going. Well, we're down 50,000 on a $2.5 million house. That's a drop in the bucket. I mean, I probably should have called that the same. And now we come down here to condo townhouses in all of Santa Clara. This is probably the single most significant one, but that's a makeup of all these others in the county. So let's ignore the countywide data for the time being. So the two micro market areas that really changed were the moderate low and the moderate high. And that becomes significant because that's where the bulk of the inventory is, which is why the county's down. And we're not talking about small changes. We're talking about going down 37,000 on a 700,000. So if I'm doing my math right, that's about 5%. We're talking about dropping here 100,000 on a 875. So you're somewhere north of 10% drop. You might sit there and go, wow, that's significant. And I'm going to turn around and say, you know what? It really isn't. And I'm not just trying to paint a good picture. I'm trying to be realistic. But condo townhouses don't have the emotional need, and this is a very broad brush generalization, but don't have the emotional need to buy like an expanding family. They tend to be smaller family sizes, and they tend to be less susceptible to the market trends. And so I think what they're doing is saying we have no family need to move, so we're going to stay put, where people in a single family home tend to have larger family sizes and are more likely to have a family need to move. And so the impact on the condo townhouse market being a greater negative impact than on single family doesn't surprise me. But the single family is so much greater than the condo. The market is driven by the single family. So hope that makes sense. Okay, so we've talked about supply and demand, and I moved the chart a little bit, but this is the heat maps for supply and demand. And these are accurate. So now this is current stuff, but it's going back to May 30th. So you can see most of the area was red, and there was a few gray areas. And this isn't too much off of what the sold price data should have been for the one that was wrong. Some gray in each county and a lot of red. Now you move forward to June 6th, and you can see the red shifted down a little bit. And then I think the next week it jumped back up again. And I think during that time I made the comment that the shift was pretty small. And that's one of the disadvantages of having a draw in the line sand number. When you cross over that line, you have to change. So I am looking into creating a gradient, but I'm not there yet. Moving on to the 20th, there was no change. Moving on to the 27th, wow, the gray area up here in San Mateo County turned red. I think, yep, and also over here in East San Jose and South San Jose, the affordable areas turned red. So the market continues to improve based on recent data that's leading indicators. So, I mean, the only area that isn't in a seller's marketplace is the expensive areas in northern Santa Clara County. So now what we'll do is we'll look at the micro market areas. The first one, because it's the most important, is days of unsold inventory. Here, it's pretty hard to pick up trends. So we'll discuss it on this graph, where you can see red being Santa Clara County, the dark gray being San Mateo County, and the condo townhouses being the yellow line. And based on my previous comment, if you come over here, we went from condo townhouses being the lowest, which is the fastest marketplace, shelter in place, and look, condos went up and up and up, and now they went from the fastest marketplace to the slowest marketplace. And that's one of the reasons you have to look at what the sub-marketplaces are doing, because if you just look at the market, single family homes basically slowed down and then they accelerated. And for the most part, they're basically right back at the level they were, maybe not quite, but pretty close to the level they were on a county basis. But the condo townhouse market went from 20 days up to 40. So the market's half as fast. Now I'll just step through these: Santa Clara, San Mateo, and condo townhouse, and on to the next data point. Here I'll discuss this because we're talking about total current inventory available without any offer underlying it. Now it's based on raw count. So Santa Clara County is the biggest number. San Mateo County and condo townhouses are very similar, but you can still see the trend. For the most part, I would tend to say that condos tend to be a little bit below single family homes in San Mateo, and after, they're basically right on top of one another. If you go back to the beginning of the year, condo townhouses were a little greater. So there's some fluctuation going on. And then here's the other 19 micro market areas, which are pretty hard to see there. So here's the county data that we discussed. Here's Santa Clara County, San Mateo, condo townhouse. And now we're moving on to offers accepted in the past 5 weeks. Same concept, red line is Santa Clara County. You can see we were going up. A number of offers accepted came crashing down. Then they turned around and going back up. We're actually above where we were. Last week I had 2 plateaus of 3 weeks and 1 week. This week I'm only having the 3-week plateau. This is Santa Clara county-wide data, Santa Clara County data, San Mateo, condo townhouse, and finally closings. So now on closings, you can notice that closings actually increased after shelter in place, and that was because the buyers were in contract and went through. I think this is probably a lower number than it would have been if shelter in place didn't happen. You can see that this is much more gradual down and a much more gradual up than the offers, and that's because you have quick and slow escrows where offers are a point in time. And also notice the sharp increase here, jump upwards, which is what I would expect. That's basically saying if you look at the last 3 weeks instead of 5 weeks, the number of closings is going up. The number of closings for condo townhouses was above single family homes in San Mateo County. Here it switched over, and San Mateo County single family homes is now significantly above the condo market, which again is an indication that the condo market is getting a much harder hit than the single family market. And if you look, the vertical separation between the red and the gray is roughly the same, saying the 2 counties are being impacted about the same for single family home. Now we go on to the county data, Santa Clara, San Mateo, condo townhouse, frequency of overbidding. Now here again, we shift back to the other category where it's really hard to see the red line in here. You know, yeah, I could probably pick it up, but we'll discuss it here where it stands out real nice. So here's your red line, Santa Clara County, San Mateo County is the gray line, condo townhouse is the yellow line. So look how much lower, how less frequent buyers are overbidding now on the condo townhouse marketplace. You'll notice the same pattern back here. Again, that's just an indication that they're getting hit a little bit harder, but it went up, it's down. This is lagging behind because I need sales price, so it's behind by 30 days. I would expect this number to start going up like it's going up in the condo townhouse market. Time will tell. This is Santa Clara County, San Mateo, condo townhouse. Again, changing gear to magnitude of overbidding. Can't discuss it there. We'll do it at the county level. This is bad data point here. I probably won't go back and correct it because it's pretty clear it's a bad data point. But you can see the magnitude of overbidding was up here around 105% for single family. And now it's basically down here at about 100.7%, maybe 100.5%. Condo townhouses did the same sort of trend. And this is the kind of thing that happens after each major shakeup of the real estate market. The buyers are just hold on to their money a little tighter. Santa Clara County micromarket, San Mateo, condo townhouse. Moving on to sale price, and we'll discuss that here. So sale price for single family homes in San Mateo County is noticeably higher. It peaked obviously shortly after shelter in place. Santa Clara County did the same thing. Santa Clara County is up, not quite as much as San Mateo, but up, both up. Condo townhouses look pretty flat. So here's Santa Clara County micromarket, San Mateo, condo townhouse. Now we're looking at median sold price, which is the price that most people talk about. I talk about the 10 and 90 as well as the median or 50 percentile. So you can see what's happening at each end of the marketplace. Clearly a bad data point here on condos. Single family homes in Santa Clara County is the red line. You can see there as this single family median sold price, Santa Clara County. So you were right here at basically 1.4 million and you're basically back at 1.4. San Mateo County was basically up here just shy of 1.8. Now it's about 1.75, so it's down a little bit. Moving on to Santa Clara County data, San Mateo County, condo townhouse data. Now we're moving on to the 90 percentile. So this is the most expensive in each area. Countywide data, here's my bad condo townhouse data point. Santa Clara, it's gone from 250 to, and that's 2.5 million. Maybe 2.7 million for the most expensive homes. San Mateo went from about 3 million up to about 3.6 right as shelter in place was impacting, down to 3 million, and now it's up to $4 million. So San Mateo expensive homes is doing better than any other market at the county level. Here is Santa Clara micro markets, San Mateo, condo townhouse. Now we're looking on the duration of escrow, pretty garbage. So here's county data. The big takeaway is you went from 25 days in San Mateo County, 27 days in Santa Clara County, maybe 29 days for condo townhouse, to everything being at 30 days. Santa Clara County, San Mateo County, condo townhouse, days on market. We'll talk at the county level. The big takeaway here, the reason this all went to zero was the MLS stopped counting days on market during shelter in place, and that's why the numbers are stair-stepping up. This is not the market deteriorating. This is just getting back to where the data should be. Santa Clara County, San Mateo County, condo townhouse. This is the data that drives it. This is as of this morning. So you can come back and look at days unsold inventory, the magnitude of overbidding in each one of your micro markets, and get the exact number. So this is Santa Clara County single family homes, San Mateo County single family homes, condo townhouses in both counties, with Santa Clara labeled first and then San Mateo. Here is the monthly data chart going back from this year back 20 years. And again, the highlighted numbers are the most significant ones. Then we did monthly data. I'm not going to make it through it. People can go back to the second Saturday and view it there, but because that's a recap, so it's we're here.